Hey guys, welcome to Crypto with Pav with me, Pav, lead market analyst over at Swyftx, and I'm here to just talk through my thoughts on the market. It's been a pretty big week already. It's only Tuesday. But yeah, and I guess most importantly, my thoughts on where we could be going next. And yeah, I mean, it's definitely an interesting one. We were talking last week about how we're at a real make or break moments. You know, the bulls really had to step in to save what was looking like a pretty terrible setup, to be honest. We had a fair few factors going against the market, just technically speaking. But I mean, the one thing we can't just underestimate is this ETF. And I think that's a great place to start today's show. Just really look at those flows, see how they're progressing. But I mean, at the end of the day, what I want to sort of cover in this episode is boom or bust. That's the question I want to try to answer. There's a lot of data that we can dig into. You know, we can look at some technical levels. We'll look at those ETF levels that we talked about. There's some Bitcoin options data that can be quite insightful to some degree. Got to take it with a grain of salt, just in terms of where generally smart money, are placing their bets on where they think the market's going next. And then I also want to loop that into a little thesis that I spoke about towards the end of last month, the altcoin rally that we might see once we saw this kind of reaction on the Bitcoin market. So we'll dive into that, just give a surface level run into that. But you can check out my previous video where I talk about that a little bit more in depth as well. But I think there's still a little bit that needs to be done on the US dollar index, which can sometimes sort of hold the crypto markets back a little bit, as all the liquidity is done globally in USD, USDT. It's all US dollar based, right, at the end of the day. So, you know, US dollar goes down in valuation, crypto tends to get freed up a little bit. It's easier for it to move as well. But we'll also touch on to some macroeconomic calendar events you want to probably keep an eye on this week. We actually have one releasing in the next hour, so not the great timing for this video, but this is the only time I have available with 3 kids. So we'll just dive into that anyway, so you know what to expect. So hopefully by the end of this video, you know, we've covered a couple of altcoins for you as well at the end, to just be a few to look out for and sort of map out some levels on that too, and I'll do a bit of analysis there as well. But let's kick in, because I think there's quite a bit to get through. So with Bitcoin, obviously we've cracked right into that 50K level. We were talking about this March high being potentially a level of resistance to crack through. A macro range Fibonacci level as well was there, the 618, but you know, we've woken up essentially this week and boom, we're just right up in there. So I mean, I'll sort of dive into this a little bit later, but I want to start with the Bitcoin ETF flows. So this is the latest prints we're able to get. Unfortunately, it's not at real-time up-to-date everywhere you go, but net positive. So we're still seeing more buying than selling on an institutional front. So that's quite bullish. And, you know, these are the kind of tailwinds that we were hoping to see from this fundamental news catalyst leading into the halving as well. This is why it's kind of a different game to what it was obviously last cycle for this reason. I know we had a ETF listing last cycle as well, but they were all futures ETFs, so they weren't actually moving the needle on supply that is out there in the market. It was all sort of paper contracts. So you could potentially argue that this is a difference of what a proper spot ETF does make on the supply-demand dynamics out there. But yeah, we're still seeing overall, way more buying than selling. The one big, one to call out was Grayscale. The GBTC product has been just net negative, just cumulatively through this whole process. There's still more sellers and buyers on that product, but you know, that might continue to be a theme ongoing for a little bit longer. But it seems like the BlackRock IBT, IBIT, and FBTC, the Fidelity products, they're just out by a country mile ahead in terms of volumes. And I think there were some reports as well from a global liquidity trading perspective for ETFs. The BlackRock and Fidelity products both listed in the top 10 globally traded ETFs in the world. So I mean, that's got to tell you something. It's likely the most successful ETF launch in history. So you can't ignore that. There's a little post here by Ted as well from TED Talks Macro. Go check him out if you haven't already. Great resource there, but sort of indicating that, there was that gold ETF launch once upon a time ago, and we can all sort of see where that one went. There's a news article here as well from Kathy Woods, ARK Invest co-founder, sort of speculating at the idea that the way that she sees the market, and of course, potentially she'd have this view because they own one of the ETF products, is rotation of institutional capital from gold ETFs towards Bitcoin ETFs. So, I mean, the thought process there is the product is similar in terms of its scarcity, similar in terms of its as being a hedge against inflation. But the ROI is, I guess, what's the most appealing thing, you know, for Bitcoin to potentially do the same run up that gold did. I mean, that's a massive markup in the market valuation and just total market cap growth that could be coming towards Bitcoin. So you can see sort of the rationale there potentially for a lot of hedge funds and investors. So that's an interesting one as well. So this is moving into, I guess, looking at potentially what the smart money might be thinking about where the market currently is sitting. So this is Deribit looks at options data and where people have hedged their bets. So options essentially forecasting of price of where you think Bitcoin might be at a certain period of time. And we can see that for the end of this month, when the contracts expire, a lot of the potential prices, the strike prices, were around this 50K mark. So this is quite interesting because I've been tracking this for some time and they really have been pretty concentrated at 50K for some time. So, you know, if the market was expecting to move towards 50K, this might potentially act as an area where a lot of these positions are settled, because with options, not to explain it too in depth, because I personally don't know every little thing about them, they do become less and less valuable as you get closer to the expiry date, because once they expire, they're basically worthless. But what I would note here is that there still are some pretty high peaks of notional value at 52 and most notably 60K as well. So there's nothing to say that between February and looking into the March expiries as well, looking at the end of the month closes, you know, 50 to 60 seems to be two prominent round figures that the market is holding on to with some sort of, I guess, sentiment and drive. So be interesting to see, you know, from a options data perspective, you know, 50, 60K seems to be the barrier or range that's being priced into the market currently. Another metric that I like to track as well, especially last cycle, was quite helpful. The Pi cycle top indicator. So you can access this across a couple of aggregators and data sites out there, but it essentially uses two pretty long moving averages to create a just a way to visualize support resistance in the market. And you can see it's been quite predictable in terms of how it's picked bottoms, how it's picked tops. It's done, I guess, a pretty good job. And usually in leading up to the halvening, there has been price interacting with this upper banding, the purple line, leading up as price, I guess, if you're trying to predict when that topple could come for the market. So back in 2016, we saw it here. What was that, about $700? Geez, that'd be nice to get that at that price. 11,000 in 2019. And then most notably right now, we haven't tagged it at all. So the game could be different. We may not follow the same sort of cadence and rhythm that we have in the past. But, you know, if we're trying to look at this as a potential area of interest that some traders might be looking at, some investors might be looking at to trim, it's currently printing. It is lagging, but it's printing at about 59K at the moment as well. So that kind of ties into what the option data, I guess, may be speaking to as well. Looking at the actual chart of Bitcoin, I mean, we're running out of areas to really act as resistance the higher and higher we go here. I mean, the only real next drawn liquidity that could happen, we're kind of seeing it play out right now. So where we have these gaps in the markets, especially on monthly candles, you can sort of look to map that out and stretch it out. And usually that's what is referred to as a fair value gap. So usually a period where the market move with great inefficiency. Often these are areas where price does look to fill before making the next decision to go higher or lower. So this will be an interesting one, I think, coming up over the next couple of days, because essentially if I start to see on any sort of significant time frame, like a daily, price start to do something like this, where it's just indecisive, tries to go higher but fails, that's a cause of concern for me, especially leading into the monthly close. We want to be trying to finish pretty high. And that's another point for me as well. The monthly close in particular is one I'll be watching with great interest. So right now, if we're looking at the Binance chart, that is 48,969. So there's two, I guess, items of significance from a technical point of view here. Monthly high is number one. You kind of want to close over them to remain bullish. Closing under them generally isn't a bullish sign, which is what we saw, I guess, at the January close, which was initially the first sign of things maybe potentially looking a bit toppy. But then if we also look at Fibonacci levels as well, you know, the next logical target there is 57,586. around about that figure. So that's also in line with the options data. It's also in line with price cycle top indicator. So there's 3 confluent factors on that could be the next draw on liquidity. But if we were to, again, subsequently not go higher, but lose this Fibonacci level, which we have just reclaimed this month in the middle of February, that could be also a potential bearish sign, or at least the points are adding up for, more of the doom rather than boom scenario. So that's kind of my thoughts on that one as well. I think on a lower time frame, it's still a little bit to be said to be bearish right now. I mean, there is nothing but bullish market structure breaks where we're clearing previous day highs like this. It's not unreasonable to spend a day just going sideways, going down before you then have the next move for continuation. So that's what I'll be watching this week as well. And there might be a few catalysts this week that could move price, I guess, in a snap direction. Once the releases has happened, it's the macro news calendar. So this week, I mean, the real big ones is CPI for the US. So we all know after last week's video, we talked about the Fed coming out and talking that it'll be a data-led decision when interest rates drop, and interest rates dropping is what everyone wants to see to really go risk on in a meaningful way. Cash is cheaper, so cash is more available. So on-risk assets generally tend to perform better looking at historical records. But yeah, we've got the US CPI data coming in tonight, so we'll see how that one performs. The big one here being core CPI remaining the same, so 0.3%. And the market is expecting or forecasting a yearly figure drop to 2.9% from 3.4%. So that is the biggest drop since about June, July 2023. So that'll be one, again, if it doesn't come in as expected, could cause some fireworks for good or for worse. We'll see what happens there. Other pretty key items to watch this week are core retail sales, as well as just the PPI. So that's coming in at the end of the month. So these are also key metrics that the Fed does use for inflation calculations. So really, really big news week, to be honest, this week. So I wouldn't be surprised if there's a bit of chop indecision with subsequent volatility once all of these ducks have landed and we know what the playing field looks like from an economic point of view. And again, I repeat, this is probably more significant now than it ever has been, just due to the fact that the Fed is saying they need these data points to come in line with their expectations to be on track for those rate cuts. So again, if we don't get what's expected, that's when you potentially start to see some issues there as well. Another thing just to mix up, I guess, things from a sentiment point of view. I mean, this is a resource, just Glassnode. You can check it out yourself. It's nothing too scientific, but it's basically just people saying how do they feel about the markets. I just want to sort of still point out that even though we're at 50K, somehow people still aren't super bullish or very bullish just yet. So, I mean, that does sort of indicate to me that we're probably still waiting for a majority of the market to still be awakened or interested in the market. I think the latest figure too is since we've gotten above 49K, that 90+% of buyers of Bitcoin are back in profit, or at least at break even. So, I mean, this is still pretty surprising to me. I may just need to find a few more websites to sort of check to see if the sentiment is the same across the board. But I mean, this is pretty interesting to me. It's almost just a bit of a survey just to sort of gauge sentiment. So that's interesting as well that we're still seeing more bears out there. Lastly, just want to touch, I guess, on the US dollar, just looking from a top-down perspective. I mean, like I mentioned at the start of this video, US dollar going up isn't too good for crypto. It just makes it a lot harder for price to go up. I mean, it can go up, but it's just a lot harder. Looking at this movement, technically, we've had the most, I guess, what you call the current cycle highs up here that we put in October 2022, where we saw, I guess, that sort of move to the downside quite rapidly. If this were to now start moving to the upside, the next logical targets are the mid-range here, and then even potentially coming back to the top of the range as well, just using range analysis. But the current obstacle that it needs to clear really is this guy here. So putting in a higher high is potentially what could set this up to look like it might be moving in this direction. But at the same time, if this fails to go higher and it just starts to curl over here, that's potentially a great sort of setup for crypto coming up in the next couple of months as to where it could be going with less resistance from the US dollar holding it down. So this is one I'll be watching probably over the next couple of weeks to see if it does have some sort of tell, some sort of sign of which direction it does choose. But just want to point out that this is probably at a pretty key juncture right now as well. So there's a couple of things happening right now. It's definitely not the easiest moment to sort of 100% have complete conviction in the market. But on that same topic, in terms of conviction, the altcoin market's probably never looked better in terms of potential ROI from, I guess, from where we're standing. So like we sort of said in my previous video, that if Bitcoin did hold and behave, there was a chance that the altcoin market could start to see some of the funds flow out of Bitcoin across that ecosystem into some of the lower cap coins to start to see some movements there. And just to talk this through again as well, this was the previous cycle high, the current cycle low, and we're just drawing a range here. Again, we've had deviations, reclaims, support, and it's just gone higher. Most significantly, we've put in a new high. This was the bear market cap high for altcoins, and you know, you can only TA things so much, but even just seeing these lows hold here on those bear market highs is you know, from a sentiment point of view, should mean something. But what's clear here is that there is nothing but open air really until you get to about here. So that's like a 30, you know, if you want to be super conservative, 16 to 20% move in the entire altcoin market cap appreciating. So, you know, you want to be researching your high performers to see which might be catching the massive amounts of that, the massive move from a capital rotation point of view. We'll run over some altcoins today. There might be ones that perform quite well. We'll see what happens. But, you know, even looking at this from a Fibonacci point of view, just measuring it from top to bottom to the mid-range, that's a 36% appreciation just in altcoin valuations across the board. So this is kind of, you know, hopefully shaping up to be quite good. And this weekly close that we got in, while it's not super convincing, it is a new high. So for me, that's, again, just another point on the side of the bulls for altcoins as well. Look, other than that, there's not really too much more I'd sort of map out other than potential bullish and bearish scenarios. I mean, I know we have covered that, but just to do it again, holding above these levels is key for me. You know, 618 here, monthly level here. We've still got 2 weeks left to go to the end of the month, so I'll be tracking this pretty closely. Between now and then, we might even see, you know, that high 50 and 60K end of town. So we probably don't even have to look at that level anymore. We'll see. But the bearish sign from here is, you know, if we start to see any data come in potentially hot, you know, things don't look like they're on track, the market might get a little bit skittish. I know the stock market's looking a little bit like it's maybe overheated, but I mean, it's been doing nothing but going up. So who knows, it could just still keep doing that because it's stocks. But yeah, I'd be really watching carefully at the very least in the next coming days, this mid-range of this fair value gap and this previous high here. You know, if we go into, let's say, a daily close underneath this level, I'd start to be concerned, is to put it short. And then the party could be over for the altcoins a little bit sooner. I mean, it's looking about the best it's ever looked, to be honest. So we'll see what happens. But let's look at some altcoins. I mean, Ethereum's probably been the one to watch. Last video update we did, it kind of looked even stronger than Bitcoin, just specifically because it was making new highs at the time. But we have seen that one continue to rise and move higher. So, I mean, some levels of interest for me on Ethereum is this particular high here. So that is the March 22 high. So similar to the March 22 high we took out on Bitcoin, that would be an area of interest to me. Oops. And also just looking at from a Fibonacci perspective, we can go from top to bottom, lines up nicely with the 618 again. So, I mean, if you're looking for a pretty pragmatic profit-taking level, that could be one right there. So from here to there, you're looking at about a 27% move. So that'll be interesting as well. Solana's obviously been one that everyone's been bullish on for quite some time now. Just to try and map this one out on a more lower time frame, let's look at the daily. So we can see that this resistance level has broken now on Solana pretty convincingly. So the only thing we have to worry about is now getting above these highs, in my opinion. Putting in a higher high here is pretty important to see this one probably continue. Could happen quickly, could take a while, who knows. But Solana's done nothing but show strength for quite some time now, so wouldn't be surprised if we start to move quite quickly. And levels of interest, again, we can use Fibonacci just to help us get an idea. So we've got this here. So we still got the mid-range to claim 133 and the 618, so 163 there as well. And I think what's important here is there is, again, a volume imbalance around that 618 level. So that, again, just adds a little bit more confluence for me. And if we jump on a monthly time frame, Yeah, we could probably see that that's a little bit bigger, so we could probably just make it a little bit more conservative like that. Have touched and filled that before, so I mean, that is interesting. I do wonder if like we do just shoot straight through that potentially. I know that's probably getting a little bit too bullish, but I mean, we'll just play it level by level. But they're the key levels that I'd be watching for Solana next. And again, if we're getting bearish on things, you know, you start to see price poke above these highs and fail to go higher in any meaningful way. So that's when you start to get concerned. And you start to look at, you know, what's the next levels lower to look at where price could go. What else has been looking good lately? I think AVAX, if we're just looking at top caps, might be, you know, it's looking pretty similar, looking very similar to the rest of the market. I keep pressing the wrong button. But, you know, going again, Fibonacci again hasn't really hit even a 382. And I guess for me, these last high lows, before we broke down, specifically this one here, that'd be an area of interest for me as well. So, you know, AVAX here, that's still a much larger move. So about 88% on that one, just to a potential cycle midpoint still. So again, looking healthy if the rest of the market can hold up. Again, I'd really want to see some sort of move above that, potentially look for a retest on the way back once we do break it, and look to aim for that level there. So we'll see what happens. Some of the more newer coins, you've got OP that's been showing some strength in recent times. So we'll have a look at that with Ethereum running. Wouldn't be surprised if the rest of the Ethereum ecosystem starts to show some strength as well. It's probably may or may not be enough data to chart this one from the Binance charts, but let's just have a crack, see what we get. So what I'm doing here, I'm just taking the first two highs and first two lows, first two higher lows, and the high that got put in between, and drawing a channel. And then the way I like to visualize the market is whenever we do throw out of this channel, it's a liquidity point, or it's a decision point for the market to decide if we're going to go higher or if we're going to go lower. So seeing a reclaim like this here is quite good to see. And then your next key decision points is the mid-range, which is here, and the top of the channel, which is here. And the reason why I sometimes change to the line chart is it just makes things look a little bit cleaner, tightens things up. But you can definitely use highs and lows to do this as well. But I just find those highs and lows are a little bit choppy. So we can see that the market did respect this level. So the next key one for OP to get through, I would say, is this mid-range here. And if we were looking to get in, potentially this area down here would have been a lower risk, higher reward area. It is currently looking like it's moving and tracking nicely for now. But on a weekly time frame, I just want to make sure we stay above probably this line in the sand, so $3.45. And if we zoom in, it seems to be doing that quite nicely. So hopefully an uptrend that can continue with the rest of the market as well. So we'll see what that looks like in the coming weeks. But that's at a pretty important point now, actually, I would say. Make or break, boom or bust. Funny that. So yeah, you'd want to see reaccumulation here to go higher, or if we do start to see this breakdown, I'd be quite concerned. But I think this is a pattern you'd start to see across the whole altcoin market, and not just OP in particular. It's just looking quite interesting there in front of us. Stacks, that's been one that I've been eyeing off just with the whole L2 narrative on Bitcoin. I think that might be a big one to pay attention to. Huge strength in these monthly candles. If we just take a bit of a range analysis to this one, so going from a high to the low that it put in, we then look for deviations. So we have the deviation here, deviation there, retest here. Your ideal entry would have been somewhere down here. But again, we're looking for signs of strength here. So if we can continue to move up and out of here convincingly, that's when we start to see this market potentially move and mark up. And, you know, if we do start to see that move, what I'm doing here is just moving the mid-range to these previous highs. It's a way to do a one-to-one move when using range analysis. You know, it's looking like $22 could be potentially the upper band of the range there. So pretty good markup. They could take quite some time to play out, but that's kind of a way you can technically map that out. Lower time frame, looking quite strong. This really doesn't look like there's too much holding this one back. There's a weekly close that I'll be maybe waiting to see for stacks. and that is getting above this previous high here convincingly. Because the last thing I'd want for it is just to go up, come down, and then just start to fall apart. So, if we do close above in a nice convincing way, I'd then look for some sort of retest into previous highs, somewhere around here. That would be a nice entry in my books. And lastly, I just thought I'd touch on Arweave. This one's shown some strength today. A storage coin in the altcoin space. Really hasn't done too much, been in a state of just going sideways for quite some time. So that's looking at a weekly chart. But today in particular, it was on the move. But, this is an example of what you might start to see across a lot of micro caps or mid caps or just general low caps that just haven't done too much in the last couple of weeks, even the last couple of months. It's really just been the higher caps that have been sort of stealing the show. That's pretty normal. But yeah, we'll hopefully wait to see something like, let's say, Arweave here. Again, just to talk through what I've done there, I've taken the last high that we had, the first low it put in, drawn a channel, and then again, we're just looking for deviations, just when the market's had to make a decision. What decision is it making? So here we've got some buying, and then the first challenge I would say for Arweave is here at the mid-range, and then again at the top of the range. And yeah, it's nothing too crazy. We want to see just reaccumulation constantly as it moves higher and higher. And yeah, again, we can look at some monthly levels. It's a pretty key high here for Arweave. So that's 18,240, and we can map that against a Fibonacci as well to see if anything lines up. Seems to be missing one. 238. So it's clear of that. So there's not much there. So again, fair bit of space to run on something like Arweave. Should the rest of the market hold up? Should altcoins hold up? But another thing I like to see in assets like this is jumping on a monthly level and looking at the last high before price broke down and made a low. So this high here, I'd really want to see price get well above that to sort of lock in more of a bullish sentiment. That's another thing I'd be looking to see as well. I guess if you had to zoom in and look on a weekly here, pretty similar to what we saw here down there. So that last high before we broke down, made a low, and then broke back above, that's a sign of strength for me. But that's not alone what I would use to get in. There's no way I was buying that at $4.48 at the time. Unless I had a really good reason to. But yeah, that's just another thing I look at as well. Other than that, I think I've covered everything I wanted to today. As long as these Bitcoin, flows in the ETF realm still start trending in the same direction, if there's just pragmatic, constant buying from an institutional perspective, it's definitely different to anything we've had previously from a dynamic sort of price perspective for Bitcoin. So something I'll be keeping a close eye on. These technical levels that I spoke about, be keeping a close eye on. The key macro news that's releasing this week, if it comes in as expected or unexpected, how that's going to affect the US dollar valuation. Really want to start to see this one start to roll over. A weekly close around where we are now, or just even lower. I'd love to see a close below there on a weekly, so 103.99. That would be setting up great conditions for at least a few more weeks, if not months, of crypto having a great time, which no one would hate. And just lastly, just to show as well, you can look at something like funding rate as well, which is, I've got this off CoinGlass funding rate heat map. It's a great way to track if the market's getting a little bit too frothy, bit too many people long or short at any given time. So for example, you can see where this looks a bit busy and complicated, but we went from yellow to green. That was when we had that massive dump and correction in the market. So it was a whole bunch of open interest across futures markets. People borrowed up to the tilt, and essentially the market moving, just wiping out that liquidity as well, like mass liquidation events. So we're only just starting to see the early footprints of some assets start to get overly, leveraged. So right now we've got Injective, which no surprise there, that's been a top performer. So people are pegging on that to continue to show strength. Cardano, Doge. We're potentially just at the early phases of, maybe you could say, this sort of phase before things get a little bit out of control again. So, I mean, this is, again, another reason that I guess I'm bullish as well, more so than bearish, just because we don't have excess leverage in the system right now. We have had that clear out and that washout, which we tend to see at tops. So it really does sort of paint the picture that we've had the cleanse. Now, it kind of does set up the next potential leg up. And the altcoins seem to be, from my perspective, looking at the data, the place to be looking. So I hope that was helpful. I hope that was insightful. Next couple of days, next couple of weeks will be pretty telling. So we'll be back next week to give an update on how that's all progressed. But until then, have a good one.